It's a pleasure to be with you on this very special edition of News First at 5:30 p.m. this evening. We will take it straight across to the top story that we are tracking and numbers that will be out any moment. The advanced GDP data will be released by the Chief Statistical Officer anytime now. In fact, this advanced GDP data is usually put out in the first week of February. But remember, the budget has been advanced to the first of that month, and which is why this data will be out due to the advancement of the union budget, that is. We'll take it straight across to, okay, there's breaking news on your screens right now. Government pegs fiscal year 17 GDP growth at 7.1%, and that by any account is a very, very ambitious number there. 7.1% versus 7.6 on a year-on-year basis. I'll take this straight across to our guests who are joining us all live right here. Mythili, let's bring this to you. 7.1% is indeed a tall order, ambitious, and obviously impact of demonetization has been completely masked in this estimate. Thank you very much, Aditi, Nayar and Suvodeep, for being with us as well. But Mythili, let's kick it off with you.
Well, I'm not surprised, Supriya, for the simple reason that the CSO has it can take the plea that it works on the basis of data that is available. And as on date, it has nothing very much beyond what it had on the 30th of November, when it gave you Q2 data, the GDP numbers, for the second quarter of the year. So based on that, after November 30th, all they have is IIP data for October and core sector data for November. So the CSO has this convenient quote-unquote excuse or plea, whichever way you want to put it, that they have no further data on the basis of which they can revise their GDP advanced estimate. And since they go by data, they have stuck to that 7.1% number, which is what the Reserve Bank of India's number also was. They know, I suppose, very well that the number will not be anywhere near 7.1, but since they go by data, they can take refuge in that plea and stick to 7.1. So I'm really not very surprised. It's done a very technical exercise without going into what it should have behind the obvious numbers. But that's the statistical organization for you.
That's the statistical organization for you, but that is also perhaps the premise and basis of numbers going forward, especially the budget math, and which is why, let's take this across to Aditi Nayar, a half-baked and rushed exercise which doesn't take into account the impact of demonetization. The number, we all know, Aditi, is going to be nowhere close to 7.1%. A, where do you expect that number to be, and does this exercise actually remains something in futility, because one will never know what the impact will be, and hence 7.1% is anything that you can pull out of thin air right now?
Thanks, Supriya. We're really not surprised by the number because it's pretty much in line with the GDP or the GVA numbers that we have for H1. So it's an extrapolation of the data that they have, which is the GDP data up till September, corporate filings up till September. As you said, IIP data for October, which is only marginally worse than what we'd seen for H1. And Government of India's fiscal data for November, and perhaps a few state governments may have provided some information for December. We don't know whether that they have provided that and whether that's really been taken into account into these numbers. So first off, I'm not surprised by where the estimate has been pegged, given the official sources of data that were available to the CSO. Secondly, our estimates are lower. Our GVA estimate for the full year is 6.6%. and GDP estimate is 6.8%. So, fair bit lower than what today's advanced estimates have indicated. And thirdly, in terms of what is the need for this number, I'd just like to offer a little bit of context. The reason that these advanced estimates for the full year come out so early is just so that there is a GDP denominator that we can have in terms of the budget to do the fiscal math for the current year as well as for the upcoming year. So from that point of view, that is really the reason that the CSO every year puts out such an early indicator, which they themselves admit is an extrapolation of available information and not really an assessment. It should not be read as their assessment of how the full year would pan out, but it's more of an extrapolation of available trends. Now, to the extent that we have, we need a GDP base to really be able to look at the revised estimates for FY17 and then put into context the denominator for the budget estimates for FY18. I don't think this is going to make a huge difference to the fiscal math in terms of how much of fiscal deficit would need to be cut to avoid a slippage when the eventual nominal GDP number does end up being lower than what the CSO would have estimated today. So from the limited point of view of what the use is for this data, I think that it's not going to give us too much of introduce too much of error as far as the fiscal math is concerned, but I don't think we should use this as an official assessment of how H2 is going to pan out.
Yes, of course, this isn't an official estimate, but one is perplexed to say that if the GDP denominator is going to be determined by this data, how wrong or how far away from the mark we can be. Suvodeep, you want to come in on that? Aditi Nayar here believes that this is not going to have much of an impact as far as the budget mathematics is concerned, because this is data that is always extrapolated. This time around, yes, it has masked, it's half-baked, it's rushed. What's your take on that?
Well, I think I agree with Aditi that it would not really change the budget math significantly. But what it's important to note is that if this particular growth rate is used as a benchmark for any kind of policy formulation, then I think we will be grossly misled in the sense that, you know, a 7.1% growth is very different from a 6.1% or a 6.5% growth. Along with that, there are certain sectoral breakdown also that comes with this release, which also gives some indication which kind of sectors are moving which way. So from that perspective, I think a policy formulation or a budget formulation, whether in terms of, you know, the rural sector needs an impetus, or which particular sector, say a real estate sector, needs an impetus in terms of if it's really slowing down, those kind of cues are taken from this particular estimate. Having said that, obviously this does not change the budget math. The tax buoyancy estimates might be a little off, but I think we can live with that. However, I think it is important to note that this year this kind of a number is leading to some amount of doubt in the market and all. But in any normal year, this number would be closer to what the full year number will be, until unless there is a huge, again, a structural change or a break point that comes in. Further, also with respect to this particular budget that is coming up, the economic survey also will gain some amount of importance, specifically to understand what the finance ministry or the government's thought process and what kind of exercise they have done and what kind of results they have come up with this entire November to December period, and also January, in terms of the note ban, what kind of impact it has on the economy, because that will set the tone in terms of what the budget should also kind of work on, or what the budget will provide for. So while this this GDP advance estimate has minimal impact on anything, I think economic survey becomes all the more important, because that is where the first cues probably will get in terms of what is happening and how the government is thinking the way forward.
All right. Just hold your thoughts there, Suvodeep, because I also have Dr. Ashima Goyal joining us all the way from Mumbai. Thanks very much, Ms. Goyal, for being with us. 7.1% is what the advanced estimate seems to suggest. Obviously, that number is going to be nowhere close to it, considering this does mask and this does not take into account the impact of demonetization. I have two questions that come your way, because I must give internals to our viewers as well. Agri growth being estimated at 4.1%. That's a very high estimation. Yes, Rabi crop sowing has been good, but one doesn't know what kind of fertilizers and what's the extent of nutrients that have been used, so we do not know that number. Manufacturing at 7.4%, is that a tad too ambitious? Because if you actually look at IIP for even for the month of October, that had contracted, and manufacturing part's a big chunk of that. Construction up 2.3%. I don't know if there's empirical evidence to suggest just yet if that activity is picking up. Ms. Goyal, how worried are you about these numbers being so way off the mark, and what purpose does this really serve, other than the fact that it may have a very lopsided budget mathematics in place eventually?
Yes, I think it's very difficult to give credibility to these numbers, because a lot of the estimates for the informal sector especially are based on benchmarks on the which build on formal sector estimates. So we are expecting a large impact on the informal sector, and that is probably not captured in these advance estimates. That said, there are some high frequency indicators which suggest that, for example, cropping patterns, that there is a recovery, that the impact of demonetization was severe but likely to be more short term. So that some indicators are showing recovery in December. But at this, and the results really depend on whether the impact on the informal sector has been temporary or it will persist. And we don't have enough data to really tell us this. I don't know what is behind these estimates, if they've really done some careful surveys of the informal sector itself, or they've just used their usual benchmarks. If it is the latter, then we can't really rely on these numbers. We're likely to be surprised by the full year.
Yes, Dr. Rajiv Kumar. Indeed. Just hold your thoughts there, because I've also got Dr. Rajiv Kumar on the phone line with us. And Dr. Kumar, we've had this chat about how demonetization is going to pull in a huge chunk of the informal economy into the formal economy. 7.1% obviously does not take the impact of demonetization, and both you and I know it may be transitory in nature, but that impact is going to be there. I just want to understand from you, how sacredly are you going to hold these numbers? 7.1%, that's projecting agri growth at 4.1%, mining at a contraction of 1.8%, manufacturing at a very robust 7.4%.
Yeah, Sunita, the 7.1 assumes that the second half of the year will be around 6 or so, which I think is an overestimate, because I would have more thought that it will be growing at 5, 5.5, so that you. Hello, can you hear me? Hello.
Yes, I can, sir. Please carry on. I can hear you, Dr. Kumar.
I would have thought 6.5 would have been more nearer the mark. But let me just say that I had mentioned to you that if some of the formal economy gets pulled into the formal economy, you might get an uptick in the GDP numbers. It might be nonetheless, that's what could explain manufacturing. We might get a lot of informal manufacturing now being up the second half, so that might have.
Right. Dr. Kumar, your audio is garbled and I will have to come back to you. I'm sorry for that. But the chief statistician is indeed speaking. Let's go and catch a bit of what TC Anant is saying. If he's not making substantive arguments on these numbers, we'll come back and carry on this discussion, please.
Is the provisional estimate of GDP which we had released in the end of May. The indicators are detailed in the press note, but are fundamentally the same indicators which were used in the month of February. The only difference between this estimate and the estimate which used to be released on February is the time period over which data is available. For the most part, data is available for the month of October. In some cases, it is available up to the month of September, and in a very few cases, it is also available in the month of November. The detailed availability of data is indicated in the press note where sector-wise calculations are given, and we have also indicated how that data has been broadly handled. Of course, it's not possible to give exact calculations and so on and so forth here, but broad details are given on how the methodology has been applied in each one of the segments. I think what may be important to emphasize is that while we have followed this practice across the board, there are some special efforts which we have taken to make sure that these estimates will in fact, in our judgment, be reflective of the full year estimate. Specifically, I would like to draw attention to the estimate which is made in the area of financial services, insurance, real estate and professional services. In this category, one of the indicators which is used relates to the growth of bank deposits and credits, data for which was available for the full month of November. But in view of the government policy of denotification of notes, the volatility in the underlying figures, particularly the growth in deposits, was felt to be an outlier, and therefore a conscious view was taken not to include the estimate for November in calculating the estimate. This has marginally affected the overall estimate by keeping it. All right, I'll try to. In the area of whatever it's called, financial insurance, real estate, and professional services, data, one of the indicators used is aggregate bank deposits and credits, data for which is available for the full month of November. However, as you will see from the press note, data only for the month of October has been used. The reason for this is that the figures for November were examined, and it was felt in view of the policy of denotification of notes, there is a high degree of volatility in these figures, and a conscious decision was taken not to base the projection using the November figures, but instead, for the moment, work only with the October figures. This is an exercise which we will, of course, carefully review and monitor over the next quarter, and a suitable decision will be made with regard to these figures in later estimate as well. As far as the rest is concerned, the details are given. By and large, the slowdown is on account of observable indicators which have been available to you and have been published, particularly with regard to index of industrial production, which has shown a slowdown, continued slowdown beyond the first half in the month of October as well, and that is therefore reflected in the overall projection. I will not spend much more time on going into the specifics of different segments, but I can include those if any questions are asked with reference to them. Thank you.
One by one. Why don't you? Yeah, one.
You take them and you ask them.
1 minute, let her please.
Sir, as you very clearly said, that it will, the department will clearly monitor the figures of November and December in the banking financial services sector. As you said, these figures are highly volatile. When you come up with again the revised estimates in February and later on with the actual estimate, do you think coming up with these 2 months, that is November and December, when there were high number of deposits, will it actually reflect much more than what is the actual figure?
Let me take the line. I will be very careful in not speculating about what will be in the revised estimate. When I present an estimate and how I've examined the data and what approach I've taken, I will explain at that stage. At this stage, since it is in public knowledge that the November figures are available, the fact that we have not used them required me to comment, and I've done that. What exactly will be the approach and to what extent how will they be used in later revisions, I will leave for later releases.
1 minute, please. One minute, let him finish. I'll come back to you.
Sir, then can one say for sure that when you come up with your February 28 estimate, you are likely to factor in the volatile deposit flow that happened in November and December? Because we are not asking about your approach in the revised estimate. We want to know about your approach for the February 28 estimate.
Okay. If you read our document which we have uploaded in the website relating to modification of the release policy, we have very clearly stated that the estimate which will be produced along with the third quarter estimate will be statistically equivalent to the estimate which was produced in February 7th. More or less the same data which was available in the month of February, which means virtually the full quarter data on most things, including IIP. Most of the third quarter data on corporate financial filings would have been available by then, but whatever is available, because that is a dynamic process, we will take as much of the data as available. And similarly, second advanced estimate of agriculture. Remember, this is still based on the first advanced estimate of agriculture. All of those will be incorporated. Those will be the basis for the estimate which will be released in the month of February.
I'll call you.
सर, वित्त मंत्री ने और वित्त मंत्रालय की तरफ से कई बार औपचारिक तौर से कहा गया है कि अगले 2 क्वार्टर तक नोटबंदी का असर दिखेगा और स्लो डाउन देखने को मिलेगा। आपको लगता है कि आपने 7.1% का अनुमान दिखाया है, ये आगे चलकर इसमें नीचे की तरफ गिरावट देखने को मिलेगी?
ऐसा है, मैं जो आंकड़े जिसके लिए नहीं अवेलेबल हैं, उस पर टिप्पणी नहीं करता। हम अपने रिवीजन एस्टिमेट्स और रिवीजन आंकड़ों के बेसिस पे करते हैं, और इसलिए मैं ये टिप्पणी नहीं करना चाहता कि आगे चल के बढ़ेगा घटेगा, और इस पे कई राय हैं और कई मत हैं.
Mythili, you want to come in on that, very categorically stating that the data up until October has been taken. There will be another revised estimate in February, but of course the budget will go with these numbers.
Well, absolutely, Supriya. I really don't quite envy TC Anant at all. He's trying his best to do a good job, trying under very trying circumstances. He's trying to do a good job of it all. And what he said is 100% correct, technically speaking, because the CSO has no further concrete data. They have concrete data only as till the end of the second half. After the second half, they have data only for IIP and core sector growth for November 2016. Beyond that, they have no concrete data. So what he says is entirely technically correct. So he's taking refuge behind that, and that is entirely acceptable from a purely technical point of view. But the fact is that if policy decisions are going to be based on this data, then the government will find it very difficult to justify. How do you say that the rural sector, for instance, needs a boost if agriculture is going to grow at 4%? 4% growth in agriculture as per the advanced estimate is very good growth, even if you accept that last year's growth was a low base. But if agriculture is growing at 4%, then how can you justify giving a boost to the rural economy, which, as we know, has been sorely hurt by the demonetization? So I think there will be these contradictions which arise as a result of this kind of data. But that's a problem that the government will have to address, because they have literally compelled the CSO to come out with early advance estimates. Mind you, these advance estimates are based on only 2 quarters data. Normally the advance estimate which we get in February is based on 3 quarters data. This time entire quarter data is virtually missing, as TC Anand has himself said. In fact, he's been very cautious, because by taking the deposits data only till October, he's tried to protect the credibility of the CSO as far as possible. But the fact remains that when you get final data, there has been a huge surge of deposits. So that might in fact come to the refuge of the final CSO number. But what kind of growth is that? Wouldn't that be quite illusory? Because we know that the growth in deposits that the banks have seen this year is not because of genuine economic activity, but purely because of demonetization. But let me draw in Rajiv on that. Rajiv, if the agricultural sector is supposed to be growing at 4%, then can there be a justification for giving a boost to the rural economy? As everybody knows, it has been hurt by the demonetization process. So will there not be these contradictions between what the data suggests and what the government actually does in its budget, we assume? Rajiv?
Yeah, actually, the 4% rate of growth of agriculture is actually quite justified, simply because Kharif was very good with a bumper harvest, and Rabi sowing is up by 6%, and the fertilizer offtake has also been reportedly quite good. So that there is no reason to believe that the output would be weak. And given that the base year last year was not so good, the 4% looks to be eminently reasonable. Now, whether that then justifies a boost to the rural economy is a good question, but I think it does, simply because some of the incomes, which are the non-agricultural incomes of the rural residents, they have suffered because of demonetization, and therefore the consumption demand in agriculture has come down. And I think the government will therefore do well to give the rural economy a boost. In any case, agriculture needs much more investment, especially for public irrigation, rural roads, and connectivity. So, as far as your question on the rural, expenditure in the coming budget, I think it is justified and it should happen. And there is no contradiction really between a high agricultural growth number and the increase in rural financial allocation for the rural economy by the government.
Aditi, would you agree with that assessment that even if you look at the sectoral growth, Rajiv says that just because agriculture is growing by 4%, there is a substantial non-agricultural income which also comes from the rural sector, and hence there is no contradiction between higher expenditure on the rural economy and 4% agricultural growth. But even extending the argument to the entire economic growth itself, an economy growing at 7.1% does not really need any kind of fiscal stimulus, but an economy growing at 6.5 2025 might, there might be a case for some kind of fiscal stimulus. So would it be not very difficult for the government to justify any kind of policy action? Has the government not tied its hands in this process?
Mythili, let me just try and address a couple of the points that you've raised. Firstly, in my opinion, just looking at the 6% YOY growth in Kharif area sown and really extrapolating that to how the rest of the agricultural sector, which includes horticulture, livestock, and then also the rest of the non-agricultural activities in the rural sector, may not be very a very fair assessment, particularly in the situation that we are in right now, where cash crunch would have been quite a big issue in most of the rural areas, particularly in Q3. So I think justifying the 4% growth in the overall agriculture and allied activities simply on the basis of the 6% rise in Kharif sowing, I don't think that that is a very fair assessment, and I certainly think that incomes have suffered far more than what the Kharif cropping data is telling us. So I do agree that some benefits or some specific intervention for the rural areas would be justified despite this advanced estimate of 4% growth, which in the Indian context certainly appears to be a very healthy number. Secondly, I just want to draw your attention to one of the numbers that I have quickly been able to see. This is the trade, hotel, transport and communication growth number. The advanced estimate for the full year is just about 6%. So I think this would be significantly lower than the H1 growth. I haven't been able to read through all of the data sources that they've taken into account when producing this advanced estimate. I did notice that wherever available, they have taken in November data for railways, for cargo, air traffic, etc., those kind of areas, and I do suspect that sales tax data for a good number of state governments must have been available, because this number is certainly looking realistic, relatively realistic for the full year at just 6%, given the fact that H1 was healthy, and perhaps this would be one of the sectors in which they would have had more of advanced estimates, or rather the advanced estimates would have taken into account more of the post demonetization lead indicators than many of the other sectors, like for example manufacturing, electricity, construction. I think all of these seem to be a bit on the higher side, and that's not surprising given the fact that we don't have any Q3 corporate results at this point in time.
Absolutely. But Ashima, if I had to draw you into an area that you're very familiar with, the financial sector, Anand has been very careful. In fact, he said because of the volatility in deposits, he's taken the deposits numbers only till October, disregarding the November numbers. But given the fact that we've seen this huge surge in deposit growth in commercial banks, has the CASO finally actually got a little bit of a cushion for itself in that fact that the final GDP numbers might actually edge up to closer to their number of 7.1 precisely because of the deposit growth? But this is not real growth, it's entirely an illusion. It's come not because of increased activity, but actually because of decreased activity and the demonetization drive. So has the CSO actually been quite careful in avoiding the number and of deposit growth beyond October, and at the same time sticking to 7.1, because you are going to see this huge surge in deposits up till December come to the rescue of the financial sector and hence to the growth of the sector in the GDP growth. Ashima?
Yeah, that's true. Deposit numbers have really grown, but at the same time, there is some recent data suggesting that credit growth has fallen to the lowest in 20 years or more. It's fallen to 5%. So banks have been so busy just meeting the demands of people queuing up that they've not been able to lend at all, or there's a fall in demand for credit. So I think this is a very, very unusual time, and TC was very careful to say that we are not using data beyond October because this is volatile, etc., etc. But I think if the government is going to use these estimates to make any decisions in the budget, then they have to be careful to use what high frequency data is available for the recent period, although the CSO is not going to do it officially. And from that draw some inferences of how the full year output is going to be affected and which are the sectors that need some help, that would need some help. I think banks, for example, really do need some help despite this surge in deposits, because as it is, they were suffering from NPAs, and then there's a slow growth in credit now, and they've been under severe stress the last 2 months. So I think this estimate, advance estimate from the CSO, really has to be taken with a pinch of salt, since they are because it's come earlier than it usually is. They are using even less data than they normally do, and whatever data they have, high frequency, they are neglecting because it's volatile, such as financial market data is available with a shorter lag, some data. So we have to really, a lot of judgment will be required in this budget, and we won't be able to rely so much on what these advance estimates are telling us.
Indeed. Just hold your thoughts there. I think Dr. Rajiv Kumar wanted to come in with his comments on the financial space and the financial bit that TC Anand did speak about. You want to come in, Dr. Rajiv Kumar?
Yeah, Supriya, what I wanted to say was that, let's face it, the 7.1 is not such a high figure, because we know that in the old series, etc., this will be closer to 5. And so therefore, while Mythili was saying that the government has tied his hand in the fiscal stimulus, may not be so really. But the big thing is that, because the investment is so weak, the growth in, commercial credit of non-agricultural commercial credit at 5.5 is the lowest in the last 60 years, something like that. And for 3 years, the investment decline has continued, has persisted, and there are plants being affected by the demonetization because of the demand closed. So I think the government must, in this budget, come up with a huge fiscal stimulus as much as their fiscal space will allow, and more. And I've been saying that it should come up with a big focus on affordable housing, worker housing, so that has a huge multiplier effect. And I think this is the time when unnecessary fiscal prudence should be given the go by, and the government must take the investment by the scruff of its neck and try and get it up, because only then will the investor sentiment improve, and we will get a pickup in investment demand, which is crucial at this stage if we want to generate the economic momentum that must be generated.
Suvodeep, you want to come in on that? And I'm going to get quick closing comments from each one of you. What does this number really do as far as the budget making exercise is concerned? 7.1%, and I agree with Dr. Kumar there. It's appearing like a big number right now, but come to think of it, it's not a very great number to go with in any case. So the case for fiscal stimulus versus fiscal prudence, the case for letting go of fiscal deficit, not be obsessed with it, and push public expenditure, perhaps, try and crowd in private investment, something that hasn't happened all this while. Investment is at an all-time low. How does this really set the stage for policy making, you think? Suvodeep.
See, the budget will not necessarily be dependent only on an advance estimate of the CSO. There are a lot of other moving parts within the budget. There is a lot of sectoral representations that happen, a lot of ministerial representations that happen. So it is not just an advance estimate which will decide how the budget sways. Having said that, obviously the government is cognizant of the fact where the pain lies from the demonetization exercise, and also over the last few years how the investment cycle has moved, where the corporates have where the corporates are hurting, and in terms of what the general feeling in the economy is. If we take everything into in the framework, then I think the budget will be a lot more than what the current release is. It will be an amalgamation of what has been going on through the last 1 year, plus the demonetization effect, and going forward where the government wants to provide the impetus. So I think it is beyond the advance estimate. The advance estimate is at best a kind of a cornerstone to just benchmark a few numbers here and there. Other than that, the exercise of the budget will be completely independent and will be keeping in mind a whole lot of other factors.
Indeed. Aditi, you want to come in on that? That advanced estimates is just one indicator, one data point that the government perhaps has to play around with. There'll be so much more. But if I were to just talk about the 7.1%, which does mask the demonetization impact, your own impact is what, 6.6% for this year. What does this really do to budget making? Has this set stage for a stimulus as far as the biggest fiscal exercise is concerned? Is there going to be more focus to rural areas? Is there going to be more focus to boost consumption, which has obviously taken a sentiment and a real hit?
Sure. So our view is that the fiscal deficit that the government will target for FY18 will not be higher than the 3.5% of GDP that they targeted for the current year in the budget, and nor will it be lower than the 3% of GDP that they had indicated as a rolling target for FY18. We may well be moving to a fiscal deficit range instead of a point estimate if that's what the NK Singh committee has recommended. So we would expect that the range will be somewhere between 3 and 3.5% of GDP. Now, in terms of what should the expenditure side of the budget really target, I think that it's a non-inflationary revival of economic growth that should be the overarching theme in the budget. And that really, first of all, we think means that there should be a big push on infrastructure, affordable housing, roads, railways. This is, of course, going to be the first merged budget for the union and the rail budgets, and also maybe on renewable energy. So in terms of sectors, I think these are some of the sectors that would really help to ease the supply side constraints in the economy and really lead to growth in a non-inflationary manner with a big multiplier effect. Also, one area that we do think the budget should address is recapitalization of banks, and we do hope that the amount that is allocated is going to be significantly higher than the 10,000 crore that the Indradhanush had forecast for FY18. Other than that, of course, sentiment boosting measures both on the consumer side and on the corporate and the investment side. I think broadly these could be the areas of focus that we see in the budget. In terms of sentiment for consumers and for households, we could expect to see higher allocations for rural job security, which is Narega, food security through food subsidies, insurance, welfare pensions, and other such social sectors.
All right, hold your thoughts there. Ms. Ashima Goyal, if I may bring this to you, and because these are closing comments, we're essentially taking, Ashima has outlisted her list of what the budget should do and should not focus on. It has to be a stimulus budget. It has to be a budget that is going to kickstart investments, give a boost to growth, also revive consumption that's taken ahead. But what do you think these growth numbers do for the union budget? It's obviously put policymakers in a conundrum of sorts. Should they be a stimulus budget, or are things actually better than what they had anticipated?
No, I think you can't rely on this number to decide that things are going well. It's not reliable. I think that they should build on this demonetization exercise that they have undertaken. And one of the positive fallouts in the long run could be if more people start paying taxes. You know, they have been hitting tax evaders, getting more data. They should use this. But at the same time, in this budget, they need to cut and simplify taxes to encourage people to pay more tax so that you have a broader base and lower rates. I think that would build on the momentum from demonetization and reward those who, honest taxpayers, as well as give the lesson to those who do not pay that they have to pay. Then second, I think I agree with the comments that they need to focus on increasing productivity, on alleviating the pains in banks so that they can start lending. The issue of 4% agricultural growth, but it's all right to spend as long as it sustains and maintains agricultural productivity, because to have low inflation growth, we need agricultural growth to continue to be high and food price inflation not to come up. That's really, really important for inflation to stay low over the long term. So even with 4% growth, if you spend in ways that improves agricultural productivity, and also because the farmers, they have had good rains after a long time, but they've got very low prices for their crops, so they need some reward. And I think focusing on irrigation and watershed development, because we can't expect 4 years of good rains. We've had good rains this year. Now we must plan to be immune to shocks from poor rains. also
Mythili, let you have the
stimulating
last word on the
consumption,
show
since
then. The
consumption is-
numbers.
and tax cuts would do that.
Mythili, let you have the last word on this. Tax cuts is the word coming in from.
Yeah, I was.
Carry on, carry
the
on.
whole purpose of asking for advanced estimates is that you have some kind of a guidepost. It serves as some kind of a compass about the health of the economy. Which are the pain points and which are the areas where the economy is doing well. Now, if you get a number like 7.1 and does not properly indicate to you which are the sectors which are suffering, then how is the government going to frame its policy? So the entire purpose of the advanced estimates has really been lost. And if you say that no, you're going to disregard the estimates, then why had you called for the estimates in the first place? So I think the government has really caught itself in a bit of a bind. You have estimates which suggest that the economy is doing quite well, thank you. At the same time, you are aware that there's pain all around. So it's going to be a little difficult for the government to square the circle, as it were, and let's see how best it goes about it. Of course, the good thing, quote unquote, is the Prime Minister has already announced what could be called a mini budget, a mini fiscal stop, as it were, and to that extent I think they've already taken care of the fiscal stimulus, and let's see how it goes going forward. What we have in the budget remains a big question mark, much more difficult to say right now given these kind of estimates.
Indeed, and on that note, thanks very much each one of you for joining us. Always a pleasure chatting with you on India's big macro numbers. We take a quick breather and come back with plenty more of news and views that we're tracking right here on ET Now.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.